Crude inventories show a drawdown for the third week in a row. But Luke, let's take a look at the 5-day chart because crude is back below that key $60 level when you would think demand is increasing a bit. What are your thoughts here?
Well, crude went below yesterday. It had a hard move down, but that was because the ECB said they're going to front load their purchases, and that killed the euro, and that had a huge move for the dollar, and I think some of the move in crude is tied to the dollar. I don't think the fundamental story in crude has really changed.
So do you think that it could move up from here? Because it seems as if it falls below that $58, $57 level, it could start to get a little bit tricky from a technical perspective as well as fundamental.
Yeah, technically if it falls below 57, it starts to get a little tricky, but I don't think it's going to do that. Again, I'm pretty confident in the summer driving season in the U.S. And the other thing is it's a little counterintuitive, but if money's going to be harder to get, and we're waiting for the Fed decision today, and you're a marginal producer, and you can't borrow money and you can't keep your operations going, production is slowly going to come off, and it's just going to be the big boys producing again, and they're going to control prices. And as you saw, what OPEC's been doing in the last few months, it's given a good floor to crude, and crude's gone up. So I think that's going to continue.
That's a great point that you make, because it's interesting to see the lower that oil goes, you're going to shake out some of those producers, as you suggested. But should oil move higher back to that $65, $70 level, you're going to have all these sheltered wells come back online, which could add to the oil supply glut. So it's kind of like, where is the right level for crude to shake out these producers and also not bring too much back online?
Yeah, well, fundamentally, I would agree with you, but I think what every bank or every lender, private equity firm, producer is seeing is that rates are going to go up, right? So what you had before was rates basically at zero, and you could go out and produce, and crude was at a high price. But if, let's say, crude goes up another $5 or $10, they're not going to be, these marginal producers or guys who are really doing it on the razor's edge are not going to be able to borrow money for long-term drilling, refining, etc. So I think it's going to be harder for these players. They've already been taken out. A lot of them have felt a lot of pain. They're not going to be able to get back into business. They're not going to be able to borrow. They're not going to be able to buy properties. They're not going to buy wells. So I think crude has got a good floor to it, and I think even if crude goes up, these marginal players are out for the next couple of years.
All right, thanks very much, Luke. As always, we appreciate the insight.
Thanks. Talk to you soon.
For TheStreet in New York, I'm Jill Malandrino.